So my next presenter is Munir Duri, the founder and CEO of Kifiya Financial Technologies. It's a fintech and an agri-tech company. Instead of talking about his expertise and his experience, I will simply tell you something I recently saw online. So I was going through a LinkedIn feed, and I saw one of our commercial banks going through a partnership exercise to expand their digital finance services. And it was a very good thing to see. It was a learning and partnerships going on there. So somebody underneath commented, this is where we are currently in the fintech digital finance space. So this is a commendable work. But he also said that we should also remember the people who were the pioneers and who started this journey, who are struggling for change in regulation and in policy so that private sector and fintechs can succeed and flourish in this space. And then I really took that to heart. And this next presenter, Munir, is one of the pioneers in the fintech space, and I hope you will give him the best applause you can. Please join us, Munir, here.
I'm not sure if I can match Aman's storytelling, but good afternoon. So today, I think we are witnessing that partnerships are key in driving the economy and specifically digital financial services in an increasingly digital world. My presentation will focus in around 4 areas: the evolution of partnerships, the trends, the rationale, things to watch, and at the end, some examples. So, I mean, partnerships is not new. It just has evolved over years, from starting from digitization, when a lot of, I think people here are financial service providers. You had to change the paper-driven industry from an analog to some form of electronic or digital copies. I think a lot of consultants in-house or outside must have helped in that era of digitization. Then it went to an era which is really referred to the digitalization of the sector. And there, a lot of banks, insurance companies, telcos changed the way their processes work, from paper-based, some electronic-based, to really ERPs, CRMs. So a lot of processes were automated during the age of digitalization. We now have reached an era that is really referred to as digital. And this digital world is really about adding value and value to the customer. And it looks at a very customer-centric approach to adding values, and this is where a lot of the new players, whether it's an agtech, banking as a service, embedded finance, mobile money, mobile payments, fintechs have played along. So these partnerships have just evolved over the last, I think, 50-odd years. What were the factors that really drove these partnerships? And now we are digital. What are the key things that are making these partnerships work and bring value to each other? The first, and I think the biggest development, is technology. Technology is developing at a speed that is very difficult to follow. What was yesterday's innovation is today's history. So in this ever-evolving world, large institutions can never keep up with banks, telcos, insurance companies. That's where innovative space players in the 5, 6, 7 segments are playing added value in the partnerships. People are realizing that products are no longer in the banking sector a saving product, a credit product, a trade service product. It is now evolved into a multi-dimension of services that people either need, demand, or have pains in solving for. So product development has changed the way partnerships are being formed. Last but not least, I think this mobile smartphone has changed the way we interact daily in our personal life and professional engagement. So these are the three major trends that have influenced the need and the rationale for partnerships. So what are the biggest models that are coming out these days? And I have picked up three of them. There are many models, and this is not by any means exhaustive at all. So the first model is really operational technology partnerships. And if you look at that, it is really fintechs, agri-techs, software as a service companies in different sectors really partnering with financial service providers to improve internal activities of banks, reg techs, compliance techs. So you have a lot of those that really play around operationalizing or operational part of the bank. The second area, and I think the most widely known area, is around the front end, whereby fintechs are now playing a lot of the banking that takes it from a traditional or conventional institute to a very modern consumer-facing products that bring a lot of value to the customers. And that is, one example is banking as a service. Then, what I earlier said, products are now key. They have become what is revolutionizing the financial services sector. There's a very famous saying, I think about 5 years ago, somebody, a journalist asked Bill Gates, do you think banks will exist 10 years from, I think it was 2018 or 2019 conference, and he said, I'm not sure if banks will ever survive the next 10 years, but financial services will always be needed for people. So that evolution really is around products and the need for product customer-centric partnerships. But we need to be careful. So when we talk about partnership, it's not only about fintech banks, fintech telcos banks, insurance companies, insurtechs, and things like that. But it's a whole ecosystem play. And if that ecosystem does not come to be, the value of partnership cannot be fully utilized. Regulation plays a major part in the adoption, the creation, the expansion of financial services. Banks play a key part. They hold the resources. And if they don't participate in these partnerships, that resource cannot be unlocked and cannot shift. Development partners, because the shift from where we are today to digital requires a lot of investment in digital literacy, investment in mitigation of risk, investment in availing ability to build the skills within enterprises. And of course, not being biased myself, but without fintech, I think the future of financial services would look very bleak. And at the end of the day, we should not forget that without the users at the center of that partnership and development will never go to scale. But we should also be wary of this partnership. Nothing is easy, nothing is simple, nothing is straightforward. So if you look at these partnerships, due diligence is really key in forming those partnerships. How do we know what technology these fintechs are bringing? How do we know that they're financially sound, that something does not go awry after 6 months of signing an agreement? How do we know that they are secure in what they offer the financial industry? How do we know those operational resilience? So if you look at each stage, there are things that banks, insurance companies, telcos should think about as they form these partnerships. They should think about, is the technology mature? Is it scalable? Is it real? Or is it a PowerPoint presentation that has been given and the front-end development that was done? Are they financially sound? Would they stay in the market a year from now, 5 years from now? Do they have the security required? Because at the end of the day, financial services is I think security is at the key of product development and any form of financial services? Do they have continuity plans? What happens if they go out of business? Would that continue to be? Do they have risk controls, risk management tools within their organization that what they say to you is true, real, and can be audited? And do they have the capacity to grow you and themselves at the same time? So really at the heart of these partnerships must be the due diligence, knowing that partnership can withstand challenges that eventually would be faced. So I'll end my presentation with giving you some examples of partnerships and why they have come to be and why they are successful. Today, I'm very proud to say that I think 2 years ago, Dr. Gammachu invited me to a session of the East Africa Finance Summit, and everybody was talking about Kenyan companies, everybody was talking about Ghana companies, South Africa companies. Today, we will talk about Ethiopian companies for the first time. The first company that I would like to talk about is the partnership with Dashin and Telebir. They have gone in and provided consumer loans that has now reached over 1 million borrowers. Although it's a very small amount of money that they are borrowing, it is a revolution by any standard throughout Africa. They have reached within a period of less than 6 months, 1.2 million consumers have accessed small loans in Ethiopia in partnership between 2 Ethiopian companies. So a very interesting story behind Telebir and Dashin Bank. The second one, I think Aman has done it, so I'll not add much to it. It's a partnership between, again, 2 local entities, Cooperative Bank of Oromia and Kifiya. And we're very proud that within a period of less than 5 months, 100,000+ small and micro businesses have accessed an average of 12,000 birr without the need for collateral. The first in Ethiopia, and very proud to say the first in most parts of Africa, including with our friends in Kenya, that they have never done it at the first go at this level of penetration. So there are 2 prime examples that can be replicated, duplicated, and expanded. But it shows to you that in both instances, it was a partnership. It was not an initiative whereby a bank bought a software. A bank bought some platform from whether it is the Asia or China or some other countries. It was a local partnerships between 2 companies and very successful. But that does not mean we have seen it all and we have done it all. We are still learning and we still need to evolve and learn. And if you look at the journey to catch up with, I see Paul here from M-Pesa, with the likes of a giant M-Pesa, a lot of partnerships needs to be developed. So I'd like to take 3 examples to say there are still a lot of partnerships that need to be formed, a lot of partnerships that could go to scale. The one that I really like, I have picked up 3. There are 100, 200 partnerships. The first one is a company called Klarna. They are buy now, pay later fintech that have data capabilities, data scoring capabilities. And we need to be careful. Here, when we talk about fintechs, the age of just software has stopped. It's all about a data-driven world. If you don't have data scoring capabilities, artificial intelligence capabilities, software by itself is a history by itself. And they have partnered with the largest bank in the world, JP Morgan. JP Morgan has at the disposal at any one time $12 billion to buy anything that they want in this world. But they chose to partner, and it tells you why partnership should be valuable. It is because it is specialization of skill. It is focusing on what each party is good at. JP Morgan is good at managing money. Klarna is good at developing innovative fintech solutions. They did not buy it. They had $2 billion of free cash sitting in their assets. Another example, a partnership between Kunda and M-Pesa. M-Pesa could have bought any company that they want. They have the muscle, they have the capital, and they have a parent that also has a lot of liquidity. But they opted out to partner with a company that is a banking as a service company in Tanzania to provide and acquire customers to give micro and small loans to. Why? Because they thought that the partnership would add more value than just acquiring some application, some platform. Last but not least, for many of you, because you have corresponding relationship with Citibank. Citibank, again, a very large conglomerate, did not go out and did invoice factoring for medium enterprises. It partnered with Blue Vine, a fintech company, and looked at financing invoices for medium enterprises. So you see this is not a major, it's not a game of money, who is big or who is small. This is about who is specialized enough to bring value to the table. Thank you very much.
Again, an interesting presentation, and it's really inspiring to see such success stories here within our own backyards. So I'm sure everyone has a lot of questions for Munir for later.